Almost midway through the earnings season Q1FY22, and it is important to note that at this point in time the Nifty EPS that has been clocked so far has been ahead of estimates. But first, let's have a look at the EPS estimated at the start of the quarter, which was 153.1 rupees, and that was revised moderately lower to 152.1 rupees at the end of the quarter. The current estimate by analysts stands at about 152.5 rupees, which is bang in middle of the start and the end quarter number. But coming to the actual EPS that has been reported so far by the 16 Nifty companies that have reported earnings, the actual EPS stands at 85.3 rupees as compared to its estimate of 79.9 rupees. So that is definitely ahead of analyst expectations. The earnings expectation overall has been moderately lower due to the various lockdowns that were imposed during the first quarter of this financial year by many states and cities. However, the Nifty EPS is set to beat expectation for a fourth straight quarter. Talking about the scorecard of Q1FY22 of the 16 companies that have reported so far, 5 companies have been above expectations while an equivalent number have been below expectation. 3 companies have reported inline set of numbers while 3 companies have reported mixed set of numbers, making it a total of 16 companies. Now these 16 companies have a weightage of 57% on the Nifty. How does the valuation picture look like? Let's have a look at that. Nifty EPS for FY22 is expected to be 723 rupees, which translates into a PE multiple of 22 times. FY23, the EPS is expected to be 847 rupees, which translates into a PE multiple of 19 times. Lastly, FY24 EPS is expected to be 952 rupees, and that gives you a 17 multiple on the price to earnings front. Interestingly, this morning you also have Credit Suisse, which has written a note wherein Neelkanth Mishra saying that the current year YTD performance has now been 8% on the outperformance, given already the high price to earnings premium that one is paying for Indian equities. The calendar year to date, Indian markets are up about 8% and that's the second best that we've had in USD terms among the top 50 global equity markets. Within the markets, he mentions that the broader markets or the small and the mid cap index have done extremely well and they continue to outperform. However, much of the calendar year performance has been EPS driven, led by the rise in the EPS. However, for further gains in the market, he believes that EPS upgrades are necessary and the performance going forward is likely to be EPS driven as well. He expects that there would be broad-based improvement in the EPS in the next 3 months to continue, and they also remain constructive on domestic cyclical, which is once again banks along with ICICI as well as Axis Bank, where they have a positive view, and they also see opportunity in the cement space, particularly Ultratech and industrials. They have a positive view on L&T along with ABB, and from the staples it is Hindustan Unilever that they have a constructive view on.